Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders every day from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for key U.S. financial markets. It's currently 7:30 a.m. Central Time, and I'm recording this in preparation for the very last trading day of the year, December the 31st, 2014. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive into today's key highlights. First of all, obviously, we've got holiday trading, and it's coming to an end. We probably have today and Friday, and then normal activity coming back on Monday. But as expected, holiday trading tends to be very slow, and this will probably be particularly true today. There will be a couple wrinkles to it today because we had the year-end situation where people will be taking their tax losses in order to offset winners and reduce their tax exposure. So that's always a little bit of interesting activity, and that may come into play especially in the last 15 minutes of the close. So look for things to get a little jumpy towards the end of the day as these adjustments are being made to people's accounts. And remember, they don't necessarily care about the best price. It's all about managing for taxes, not for some particular advantage or disadvantage on a few cents with the stock. So you can see some pretty ragged trading going into the close today. All in all, though, if you look at the trading these last few days, even with a holiday period, it has been nearly comatose. The S&P fund, SPY, has moved an average of only 0.36 intraday during the past week, matching the sixth most non-volatile week since its inception in 1993. So that should tell you something about what we are dealing with right now. So let's get into our daily report, and an awful lot of things are similar, so we're going to go through some of the typical things pretty fast today because they have not changed the last couple days. We are still in market trend intermediate term phase opinion. Phase 3, bull flag, bull flat, looking for higher highs and higher lows. We're going to talk a little bit more at the end of this video about what that Phase 3 means, so we'll get into that later. Portfolio trader posture is still this uptrend under pressure, which seems really weird when you have new highs being set, but it is a reflection that we've had such low volume. So we happen to have had this bounce back up, this bullish action in the last 2 weeks under extremely small volume, as I just referenced in the earlier statistic, and that has caused this divergence. So that's still in play. Though on market posture for our active traders, intermediate term bullish trades are still okay, as are short term bullish trades. So just keep in mind we've got a couple divergences going. On the portfolio trader position sizing opinion, still 0 to 25, whereas with volatility with the VIX, that is telling us that we're in the window and we can be 75 to 100%. So that divergence continues to play across our position sizing models as well. On market timing, there's a couple of special circumstances obviously with today, so you've got to keep that in mind. One of the things to keep in mind is that week closes at 5 days lows often lead to a bounce, and we had that at the close yesterday. The last day of the year used to be bullish, but that edge seems to have flipped bearish since the turn of the century. So we are looking for a primarily bearish finish, and especially in those last 15 minutes. And this is even more true if the market is already down for the day at 245. The last 15 minutes can be even more bearish. So several things to keep in mind with the holiday influence sessions with such tiny volume. it is really, frankly, very hard to get much of a market timing opinion that means anything. We really are in that no edge territory when you're dealing with these kinds of volumes. In terms of the 3-day outlook, bullish, and 2-week outlook still looks bullish. Market forecast is very bullish. We did have a bit of a curling over and fading, but we're still in the upper zone on 3 of the 4 indices. And the fact that we've dropped just barely below in the NASDAQ at 79.5 is not in particular warning flag at this point. In terms of our hedge warning, we still maintain our level 1. Really no change on any of this since yesterday. All our volatility measures are the same. Intermediate trends still sitting with the same SPX and Russell new higher high, but have failed to put in one by the NASDAQ yet, so we're still concerned about that. Still concerned about these distribution days. We're still sitting at 5 in the S&P and 7, including 5 in the month of December for the NASDAQ. So a number of warning signs coming in there. VIX continues to be within our volatility window, so it is conducive to option income strategies, though you have to be in mind that we're likely to see a significant increase in volatility coming up in the next week to 10 days. So while it has been super quiet, it is not likely to stay that way. With taking a look at the individual sectors, we have had a little bit more weakness coming in, but still all the sectors are in pretty good shape with the exception of energy. Energy, of course, has been an improving sector, but it was really beat up, and you know, you're really looking at are you able to play the bottom, or are you able to determine the bottom? Is this the bottom kind of scenarios and trying to trade the energy complex right now? Much easier trading going on in some of these other sectors. Indeed, our theme continues. Utilities continue to be hot, and they may be the story of 2014. Consumer discretionary also did well yesterday, financials and healthcare. Now, on consumer discretionary, one thing to keep in mind there is that it actually is, from a sentiment standpoint, pretty exhausted. It's running an 81 right now, and is really setting itself up for a bit of a topping and pullback pattern based on just kind of running too far without a pullback. So while the consumer discretionary continues to be hot, and frankly I would be looking at any kind of pullback as a buying opportunity first, until proven otherwise, you should be aware that if you're in some positions that are under the consumer discretionary sector, that you might want to be looking to protect your profits, or start getting that watch list worked up for opportunities to add to that position with any kind of pullback that might occur, especially if we get a broad market pullback, and that might be one to find some new positions in, as it has continued to be very strong. On the industry group side, really the same cast of characters. Retail, railroads, transportation, internet, and healthcare are the primary ones that are popping up in the shadow trader industry group trend scores. Nothing in particular in terms of broad market being oversold or overbought from their perspective on the industry groups at this time. When we take a look at the morning report, our overnight activity, we had really quiet U.S. futures on the indexes. The primary action would be with respect to Crude oil down 2.11%, so over $1 in the overnight for crude oil. So this one continues to show significant weakness, and I would expect that the energy complex will open pretty weak this morning, and you'll see probably the biggest action of the day in some of those oil industry complex names. Gold was down 0.34. Still nothing really of note other than crude oil, so look for impact on the energy complex. From our overnight markets overseas, we have the Shanghai up 2.18%. China has been hot in the last few days, so if you're looking for ETF exposure in overseas market, FXI might be something to check out. It has been a bit volatile lately, but that might be something to throw on your watch list and see if one of your setups might be taking a look there. Nikkei down 1.57. DAX, Germany continues to be a bit weak, down 1.22. So there you go there. Macroeconomic reports. Obviously, we have just the unemployment claims just came out a few minutes ago. And we've got some orange flag reports coming out later today during the market. Chicago PMI, pending home sales, and crude oil inventories. So that could further roil the crude oil traders. And then tonight, of course, we have one of the PMIs from China. And then coming into Friday, quite a bit of international activity. Not really much in the way of U.S. We do have a manufacturing PMI on Friday to be aware of. In terms of market condition, only a couple things here I would draw a note to. And notice that the implied IV percentile continues to raise. And we now have 3 of the 4 indices that have come up out of the bottom third and are seeing more activity there. We are also seeing a little bit more activity with respect to NASDAQ in terms of standard deviation days compared to the other 3 indexes, so also kind of keep that in mind. If there is going to be a significant moving day, the NASDAQ seems to be the one that's most primed to lend itself to the most volatility in relative terms as a percent to the other indices. So something to keep in mind on that. And I think that's probably enough time for today. So we'll cover that about the market trend on another day. As always, of course, greatly appreciate if you like what we're doing here, if you like what we're doing with this morning report, please like us on your favorite social media platform, YouTube. Obviously, we welcome comments on our Facebook page, and you can follow us on Twitter to pick up on our other blog postings. We post generally about 4 times a day at least, various things of interest to traders, investors, and day traders, so be aware of that. Obviously, this is our website, falconglobaltraders.com, and you can send emails to support@falconglobaltraders.com. We do have 2-week free trials available to any of our 3 live trading rooms where we model our trades from entry to exit every single day. Disclaimers, hit the pause button if you'd like to read this in more depth. And as always, we greatly appreciate your interest in what we're doing at Falcon Global, and greatly appreciate you liking us on your favorite social media platform. Thank you.